Good morning, traders. Chris Buss here with your morning look at markets for Friday, June 4th. Okay, got a lot of macro things going on today. Futures are held in suspended animation ahead of May non-farm payrolls that print at 8:30. We also have Jay Powell talking at 7 a.m. Somewhere. I'm not sure if that's a breakfast meeting somewhere or if he's over in London or where he's at. But anyhow, an early start for Jay Powell, and it'll be interesting. I'm sure he knows what the number is. He's not waiting for what they say on the TV. So I'm not sure if that would influence his talk this morning or not. But he's not gonna openly say what it is, but they may be starting to, ramp up the rhetoric a little bit about, talking about raising rates. So that'll be closely watched. So anyhow, that's freezing the futures markets right now. I did notice that oil was up about 0.5%. So we got Jay Powell at 7. We got non-farm payrolls at 8:30. We got factory orders at 10 a.m. And just another point, the consensus number on the jobs report is 671. And you'll remember last month, April's was a disappointing 226,000. A lot of people will be wondering if that gets revised up or not. So if we have a really hot jobs number and then they revise April up, that'll have a different feel than if, of course, May comes in disappointing as well. But you'll remember yesterday we had the ADP employment report, and I think they were in that 800,000 range, so that came in pretty hot. A couple other FOMC notes. There was a statement yesterday that the Fed is going to start selling the corporate bonds that it's been buying for the last year on June 7th. So they're going to start trying to unwind that. And then the FOMC meeting is June 15th and 16th of this month. So a couple weeks out. So let's dive into the implications. I want to look at the US dollar real quick, what it did to the commodities, metals, and mining space, and then get into where we're at on the indexes and FATMAAN names. So US dollar, hot ADP number yesterday, and how that rolls into the dollar if, it's seen that the economy is rocking and rolling. The implication is that will pull forward the Fed's decision to start tapering. And that's going to influence the dollar. And you can see yesterday we were up 0.64%. That's a big move on the dollar on a daily print. And so we were coming down, we had found a little base here, and then we had this low back here that we were looking at to see if price on the dollar would come down and test that prior low. Well, it reversed. So now we've broken the downtrend line, and I've penciled in here a few overhead possible targets. We've got the declining 50 here at 90.71. Then we've got a layer at 91.25. And then, of course, we've got the 200 up here at, let's call it 92. So those are potential upside targets for the dollar. And we know that a rising dollar is bearish commodities. It's bearish precious metals. So here we have copper. Copper was off almost 3% yesterday, and now we've printed a lower high on copper, and we've pulled back to the 50 EMA. Right here at 440, we've got a decent sized volume over price bar. We've got a rising trend line, and we've got the 50 EMA. That's an important spot. Could it fall further down to the main trend line? Sure. That would put it in here at, let's call it 425, 430 down in here. But I want to be, I'm still bullish the commodities and precious metals. So, but we weren't loaded. We haven't been loaded to the gills on those positions. So I want to see if it holds right here at 440. And a lot will depend on, what the reaction is today. If there's a monster move in the dollar higher, it's gonna push this copper down to this trend line. And there I would be willing to take a shot long at trend line support with a stop just below and see if we don't get a bounce back up. So that's copper. We do have some positions on in gold, or at least I do, in the miners, and gold did not like that dollar move. We broke trend on RSI. It's hard to see here, but there's a bear cross on PPO, and then we gapped down yesterday on price. What was it? 2.8, 2%, and we're down here tagging the 20. Now, if we lose 174, probably going to come down here to 171 and test the 50. That would be, I think, a great place to try along. But today, if we lose 174, probably going to exit my miners. I'll take a quick look at that. I'm in Kirkland Lake, KL, and Newmont, ticker N. N as in Nancy, E as in Edward, M as in Mary, Newmont Mining. So the miners are going to follow gold. So what I want to see today is, does it just stabilize, or is there a leg lower? And so I think we'll know that by the end of today, and I'll certainly let you know what I'm going to do with gold. Same thing with silver. Silver was trying to break out here and then gap down yesterday, 2.64%. Came down, tagged the 50 and got a bounce. I think there's a support line right here at about 25.25. And then there's the 50 at $25. And then there's another support area down here at 24.60, something like that. So silver's got some work to do to stabilize. And what I'd like to see here is the 50's got to hold at 25. I'd like to see it consolidate here a little bit at 25.25 and then make another run higher. But if it gets whacked back to these lower levels, and certainly if it were to lose 24.50, it may come all the way back to the 200, depending on what the dollar does. So if you're in silver, fine tune, sit up taller in the chair, and let's pay attention. And by all means, keep your eye on the dollar. Let's dive into the indexes, see where we might be headed today. There wasn't a lot of movement yesterday in the afternoon, and I think part of that would be waiting for the data release this morning. I was thinking it might be a little bit more volatile, but they just went up and tagged some pivot points and then backed off and then parked it in the middle of the range, of course, where it's hard to really do anything. So on SPY, 2 hour, I think you just continue to key off of 420. And then this morning, if we break below 418, probably going to come back down here and test the prior lows of yesterday at the top of the gap at 417. and then if 417 breaks, then 415 would be your gap fill. On the 30-minute chart, I drew in a little trend line across the tops, but I still think 420 is your number. If they, take it green above 420, all this was just, a head fake, a move down, and then recover that 420 level and take it higher. Same levels apply. It's 418 and then the gap at 417, etc. on the way down. So we'll have to see, pre-market what's going on, because with JPAL at 7 and the non-farm payrolls, we could gap up, move sharply higher or sharply lower ahead of the 9:30 cash open, and then we'd have to deal with, is there a gap above or below price when we open. So on the Qs, we've got a little level here at 331, and that was from the gap down. They came back up to 332 for a touch, and then the rest of the afternoon price was pinned down below 331. So I think 331 is a good pivot. Remember, of course, we've got a gap at 329, and we've also got the gold moving average here coming in right at the top of the gap at 329, and that equates to the 50 EMA on the daily. So that's a really important level on the Qs. I mean, if the bears are going to do anything, they got to have to crack the 50. And what would do that is, of course, to fill this gap and then contain the bounce. Because one scenario would be go down, fill the gap, and then bounce at this level and then take it back higher. So I think that 50 is going to be an important level on the Qs. Just blowing it up here in the 30-minute chart. We've got a gap above 332 up to 333.50 right here. Here's that little level at 331, and then we've got a big pivot at 330, and then the gap at 329, and then a gap fill at 327. So it's very well defined on this 30-minute chart. You've got levels really $1 apart. Gap entry 332, intermediate level 331 is a pivot, and then 330, 329, 327. IWM 2-hour, they came down, touched this gap at 224, recovered this main level at 225.50, came up to resistance, and then backed off. I think today, 225.50. Why? Reaction, multiple reactions, reaction, support, break of support, recovery of that. And so now I think you can have a little confidence leaning short if price breaks below 225.50. As long as it holds that, I mean, since we're here in the middle of the range, it's going to be hard to take something anyways. As long as it holds 225.50, I think the bulls are fine, because they can bounce it from there and take it back up. And you can see those intermediate levels here on the 30-minute chart. You've got this overhead gap, and then you've got a gap below, and then you've got a big bar here at 225.50 that will be an important level of support on the way down if it holds. And so I'd key off of that 225.50. If you're new to the channel, thanks for spending some time with me. I think if you focus on the levels and try to work on your execution around those levels, I think your trading will see a marked improvement. Hit the subscribe button and the alarm bell. You'll get all this content every time I publish. And if you jump over in the show notes, there are links to the blog site and how to register for all the content that I publish. That would be great to have you. Longtime listeners, I really appreciate your support. Please pass the link along to your whatever trading groups you might be a part of, your circle of traders. Maybe there's something beneficial in here that they can use as well. I'd really appreciate that. So let's move on to FATMAAN. Move down to 324, bounce back up to resistance here at, call it 327.38 at the bottom of the gap. So you're going to have a pivot point here at 326.25. So I think you can key off that there today. And if price were to lose 324, then it's going to open the door down to 320. But keep in mind, Facebook has been one of the stronger ones in the FATMAAN group. So it's always good to have a picture in your mind what's happening on the daily time frame, because I want to show you a couple things here on Apple. We're on the 60-minute chart here. RSI, bearish regime below 50. Momentum, bearish regime below the 0 line. Downtrend, lost support, no bounce. That's like the quad bearish setup, right? Momentum and RSI bearish, downtrend, below support, breaking, no bounce. That's all bearish price behavior. So right here in the middle of the range, below this 124.50, but above the prior low, kind of tough to take a position, you know, an active position. What I'd rather see you do is wait for a move either up to this pivot point or see price break the low or at least come down to the prior low where you'd have an opportunity for a bounce. But as we can see, this is the daily chart. Let's go through the same methodology. What is RSI doing? It's bearish. It's below 50. Broke this trend line. Has not been able to break above. What's momentum doing? Momentum's coming out. It's bearish. It's below the 0 line. What's price doing? We had an uptrend off the lows. And you remember last week or a week and a half ago, actually for the last few weeks, here we had a touch of the trend line. Here we had a fake breakdown, came down below and recovered. We came up to the moving averages that are all pointed down and was rejected at the 50. And now we're back below trend and below this 124. So on the daily chart, the door is open for a move down to the 200. So if you're sitting there on the intraday charts, you've got a bearish setup working on the daily, and so you can have more confidence that if you're shorting Apple, you are shorting with the trend, right? And that's always a more powerful trade than trying to short a stock on a 60-minute time frame when the stock is in an uptrend. That's a much harder trade. So just as a point to note, when you're doing your active trading, always have in mind what the daily chart is doing. And you'll probably find a lot more success trading with the trend. That is, if the stock is in a daily uptrend, then on the 60-minute chart, look to buy dips. Find those support levels that you can buy rather than trying to short a breakdown that probably isn't going to go very far. So let's keep rolling here. Tesla. This is the daily chart. and we'll go back to the hourly in a minute. What's going on? RSI, bearish. Momentum, bearish. Price, broke a trend line a long time ago, dropped down here, and it's been wrestling with the 200 here for a while. We got a kickback bounce. That was a great place to recycle shorts. If you had been short and you covered down in here, this would have been the place to recycle. And now we got a 5% move yesterday. So now going forward, if you're on the daily time frame, 560 is the level you want to key off of right here. You can see why support, 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 coming in for another shot. So, and you've got the 200 right above it. So 560 really comes into focus on the daily chart. And if 560 breaks, I think you're going to come down to 500 almost, you know, like ASAP. And then if that breaks down into 460, where you start getting some more technical support. Notice here between 460 and 560, a big price void here on the charts. So that's a place where price could move very quickly. Another point to note, Tesla is a big part of the ARK complex, the Cathie Wood ARKK ARK ETF. So if there's a big rug pull in Tesla, the ARK fund is gonna see some pain as well. So keep that in mind. And for you trade, I mean, even if you're not trading Tesla, keep this 560 dialed in, because given this void, you could get a very quick $100 move, and that's a great risk reward on Tesla for a short trade. Let me give you an example. So you're at 560, right? You got the 200 at 580, so that's 20 bucks. So you break 560, you could set your stop at 580, and you're going for a $100 move. So you're risking 20 to get 100. That's 5 to 1. That's a great risk reward setup. And you could dial it in even tighter. You could say, okay, well, if I break 560, I'll give it to 570. That's fine. That's fine as well. So you could play it, you know, a couple different ways depending on what your time frame is, how long you want to give it, etc. So I really like that setup. And here was the price action yesterday on the 60-minute chart. We were talking here at the noon hour about that it had to hold 595, and then not long after that, there was a news release that the China sales numbers for Tesla were poor, and they pulled the rug fast and finished on the lows down here. So there's that little gap between 570 and, you know, like 562. I imagine that will fill at some point, and then we'll see what happens here at 560. So unless you were short here yesterday, you probably did not, you know, we said to watch out for 595. You probably couldn't have got it set that fast. That was a fast bar on news. You know, Algo's reading that. So don't feel bad if you were, you know, if you didn't catch that. That was a very quick bar. Microsoft, make a long story short, it's all about 245. Below 245, I think you come back in here and test these lows at 243. And if that breaks, 241 on the upside. If it can recapture 246.50, you could fill this gap here. I want to take a look at the daily chart just to show you. We've got the uptrend And here's that big breakout level that we've been keying off of for a long time, this 245. But notice that right here, price is below trend and below all the moving averages. So that's very weak positioning. Notice that we've got a bearish cross forming on momentum right at the 0 line. And you'll remember that that's a very bearish look when you get a weak bounce, but it can't reclaim the 0 line and then rolls over. That's a really weak signature. And you've got RSI breaking back below in the 50, back below 50 in the bearish regime. So Microsoft is on the edge here, and 245 is the key, and the 200 is way down here at 227.50. And I think if things start falling apart, I think you see price come back into 230, where you've got this large volume over price bar and a lot of transactions in here. 230 is going to be a big level, and just like my comments on Tesla, you break 245 and hold it. Here was a fake out, here was a fake out. You get down here below 245 and actually hold it, you got a pretty good risk reward to the downside, because I do think it finds 230 on a move, on a sustained move downward. Amazon 60-minute chart, simple, 3,200 your pivot. Above is okay for bulls. Might get this gap fill, go up to our 3,250. But below 3,200, there's a gap to fill here, and we've got the prior lows at 3,140. So 3,200 is definitely your daily pivot for today. And I wanted to show you the daily chart. RSI, bearish. PPO, bearish, below 0. Price action, move up to the top of the range. We had a high back here, and then a high here, and then we saw the liquidation move, and then a move back up to the top of the box. Now price could not break out of the top of the box, and now it's pulled back away. So, that's a bearish look. What the bulls, and we've talked about this, what the bulls need is to reclaim these moving averages that converge at around 3,250 and reclaim those and break out. Because as long as price stays below 3,250 and below these declining moving averages, it's a bearish look. And you've got the 200 coming in at 3,100. So that's going to be a key level on the downside, because if that breaks, then 29.50 at the bottom of the box. So job one for the bulls is breaking back above 3,250. So on the daily chart, on the hourly chart, knowing that the posture of the daily chart is bearish, that should give you more confidence on a short entry versus a long entry, if that makes any sense. So again, keeping in mind what the daily chart is doing should influence and help you on your short time frame active trading. Google, this has been a strong chart, but price dropped below this 23.55, gap above. If it can reclaim that level, you can get long and go for the gap fill, getting back in this trading range. Remember, a break above an old trading range, the target would be the top of the box. But as it stands now, anything below 23.55 would probably favor a move back down to 23.30 to test these prior lows. Let's just check in on the daily real quick. You can see the daily is one of the nicest charts in the FATMAAN complex. Why? RSI, bullish regime. PPO, momentum, bullish regime. Price above trend, near the highs. Holding the 20, well above the 50. So the daily chart is bullish on Google, whereas, for Apple and Microsoft, it's bearish. So for Google, maybe the right play on your active trading is be patient for a long entry. And if you get a pullback to support, given the daily has been strong, maybe you want to try a long bias on Google. So anyways, that's what that looks like. Netflix daily, back to bearish. Bearish RSI, bearish momentum. Still within this $90 trading range where it's been for almost a year. That's really incredible when you think about it. Just a massive, massive, massive consolidation zone. But we're below the midway point in the box. We lost this 500 level, came down, and now we're looking at these prior lows at 480. So given the gap down, given the continuation, my expectation is there's going to be a come to Jesus moment at 470 at some point. I think at this point in the travel, it's going to find this 470 level, and then that will be the day of reckoning, right? You break 470, goes way down. If it holds it, potentially back up to the top of the box. So, but on Netflix, the bias has to be lower. Now, right here today, in the middle of the range, I don't think there's anything to do. I think you wait for 493 or 485. So, last chart, wrap it up quickly. Semis, middle of the range, nothing to do. Wait for a move either to 244 or 248.50. Then you'll have a much more objective level to shoot against for any active trading you may want to do. So let's watch the macro today. Jay Powell at 7. Non-farm payrolls at 8:30. It's going to have a big influence on the dollar, and by extension, a big influence on the metals and miners. And also, if comes in really hot, you may see equities take a dump, because that would imply that they're going to have to taper quicker. And I don't think the market's going to like that. So let's see what happens. This has been Chris Butts with Traders Profit Compass. Have a good day of trading. Talk to you next time.